Hello, we are here to develop a financial planning for commerce and to show that this is useful for financial planning. And we start here. This is the user guide. You see how to develop it. Here are the assumptions. Here exchange rate. You write what is the exchange rate. What is the exchange rate? And here you insert the historic annual inflation, and automatically here is inserted the expected annual inflation. This is discount rate. Here is 10% and have a hyperlink because it is calculated in other template in other uh, template. Here is to get the discount rate. You must insert here the bank loan. For example, is 5,000 rands, and the equity capital is 15 rands. The discount rate is 10%. Come here. Corporate income tax and VAT. VAT we use when uh, revenue is at least 1 million rands. And sales volume, for example, we expect to sell 5,000 units. Then after that we come here. Objective, this is a working hours calculated. Working hours calculation. The objective is calculate how many hours will be worked per month. We calculate it, working shift and work days per week, including Saturdays, and we insert values here. We insert here the number of days. For example, 255. You know, insert number of days here, and the days come here. Total of days come here. These days are respective to these days. This number of days are respective to these days. Work days, Saturdays, Sundays, holidays, and work days. Okay. Other calculations are made automatically. This is the investment table. This is a commercial financial planning. We will buy, for example, a building. The building will be uh, will be restored one building, and the building cost is 20,000 rands. Yeah, because is an example, I will use one item only, 2,000 rands. But we must see if 2,000 rands, if this total overall investment is equal to the total of investment and the projection of investment of project financing sources. Here the total here is 20,000 rands, so you can proceed. Now we are in the financial planning template. We start it with net revenue volume. Now we start it with variable cost. I apologize. For example, once we want to buy to sell shoes, want to resell shoes. Unity variable cost of shoes 100 rand, and automatically the average sales price is calculated. The gross revenue volume is calculated. We have here average sales price annual sales volume, revenue volume, it is here. And we have here financial investments. For example, we expect the financial investment for the first year is, for example, 1,000 rands, and rent properties for here is 5,000 rands. Okay, value VAT, value added tax. The gross revenue volume is above 1 million rands, so we needed to insert the VAT. VAT is 16 rands. Okay, so here is the VAT, and now we go to the fixed costs. Indirect labor, click hyperlink. Here is the indirect labor template. For example, we have here one director, just one, and salary 20,000 rands, 20,000 rands. Income tax, for example, 20, 20 and 10 rands. Okay, here we have, and it's calculated automatically the social security, income tax. All these three are in the same table, so come automatically together here. And here F is third party supplies, and this we go to the third party supplies. Here is water, and for example, monthly we expect to pay water 150, 150 rands. Here is the total, and all is here. Other expenses, I don't know what is other expenses, right here. And financing expenses is calculated in another template. I did in the integrated financial expenses in this template, but we insert here, here, then and here's the reserve fund. For example, 10. For example, if you don't want reserve fund, 0 here. If you want reserve fund, example X%, here is the reserve fund. And project is viable because the net present value is saying there are profit. And we have the projection of sensitivity analysis. This value is the price break-even point, where above this value the business have profit, and this value is the number of units must be sold, must be the number of units must be sold at least to get profit, to start making profit. And this is break-even revenue. This is the minimum revenue is needed to get profit. Okay, it's done the financial planning. So there are to the financial control. Here is this monthly cash budget. We have here the items. We have the budgeted values, actual values, and variation. For example, here we have the 100,000 rands of gross revenue volume. So we have here their performance is 220,000 rands, so it's favorable. But the performance is below the variation will say unfavorable. Same thing to other things. And you have here daily treasury. Daily treasury is here, same thing as I explained before. The dashboard, optimistic scenario, you insert here about inflation of sales volume, operating costs. You insert the value you want in the optimistic scenario. Can be 8% sales volume and 3% costs. You can do the same thing. How you must you want to you can do the scenario you want here. For the pessimistic scenario too, it is the yeah, okay, thank you very much for watching. We will talk another video.